Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Fidelity is fundamentally reshaping the institutional crypto landscape with its newly filed prospectuses for the FETH and FSOL funds. These documents explicitly authorize 100% staking of underlying assets, a move that signals deep liquidity integration but also introduces significant redemption delays for investors. The strategy is already in motion. FSOL currently holds 99.64% of its Solana holdings in staked positions, maximizing yield while preparing for the imminent launch of Ethereum ETFs. This aggressive stance highlights the industry's pivot toward passive income generation, even as it acknowledges the operational friction of locked capital. Meanwhile, the tech sector is grappling with a high-stakes legal battle that could redefine Meta's financial future. The company faces a theoretical penalty risk of $1.4 trillion in an ongoing youth safety trial. Despite the catastrophic headline number, Wall Street remains largely unmoved. Analysts are maintaining strong buy ratings, projecting a 34% upside for the stock. This divergence between legal peril and market optimism suggests investors are pricing in operational resilience rather than regulatory fear. Jim Cramer's recent inverse trade strategy is losing ground as traditional analysts continue to back the social media giant's long-term growth trajectory. On the macro front, geopolitical tensions are actively distorting global supply chains. Houthi missile strikes on Saudi Aramco infrastructure have intensified concerns over Gulf oil transit risks. The rerouting of vessels through the Red Sea is complicating Hormuz transit data, leading to a collapse in copper backwardation. This volatility is rippling through the broader market, contributing to a 0.3% fall in the S&P 500. The decline is partly attributed to the EU's lagging progress in critical minerals. While the Trump administration has secured billions in deals within just 18 months, EU officials like Bernd Schaefer are highlighting significant delays in their own supply chain strategies. This geopolitical imbalance is forcing a reassessment of industrial commodity exposure. In related news, traditional finance is showing surprising strength. Visa and Mastercard shares surged following robust U.S. spending data, underscoring the resilience of consumer demand. This economic durability is providing a floor for crypto markets as well. Bitcoin is holding steady at $78,000, supported by the liquidity flows from payment giants. Tron has also stabilized, indicating that strong fiat spending habits are indirectly supporting digital asset stability. The correlation between traditional payment volumes and crypto liquidity is becoming increasingly evident. Looking ahead to today's release, the economic calendar remains relatively quiet with no major high-impact data points scheduled in the next 36 hours. Markets are currently digesting the geopolitical and corporate developments outlined above. Investors are watching for any shifts in Houthi activity or updates on the Meta trial that could trigger sudden volatility. Until then, the focus remains on the interplay between institutional crypto adoption, tech legal risks, and global supply chain disruptions. The market is in a holding pattern, waiting for clearer directional cues from both policymakers and corporate earnings. That's your market briefing. Follow Rumour with AI for daily market intelligence.